Oh, what's up, you guys? Zoeb here from OneGlassTrader.com, and I've got a brand new four-part series to share with you guys about the zone recovery trading strategy. Now, this type of content is not the usual type of content you guys expect to see from me, but I would love to hear you guys' feedback. So please comment down below and let me know what your thoughts were around this four-part series. Now, this was an interesting topic to go through because I got an email from a subscriber asking me to talk about or understand more about my views on the zone recovery trading system or strategy. And I'll be honest, I didn't have a clue what the zone recovery trading strategy was. So I watched a few YouTube videos, I Googled it, and I'll be honest, it's quite interesting. It's a very risky strategy, I'll put it that way, but it's a very interesting strategy. So I thought, why not test it out for 10 days, document the journey, and kind of share it in this four-part series with you guys. So just to break down what these four videos are going to talk around. So this video is all going to be around the zone recovery system itself, the mechanics behind it, as well as my trading approach and trading style using the zone recovery system for the next 10 days. Um, and then part two and part three are going to be me walking you through a kind of a journaling approach of looking at the charts of the 10 days of trading. So basically what I go through every single day, I show you, well, I put the trade on and then I go on camera and then walk you through about why I've chosen that trade, why I've gone long, why I've gone short, why this currency pair, and then what we do, we let an EA, so there's an EA involved in this, and I'll go into that later on in the series, that kind of manages the trade as part of the zone recovery system, and then I come back on camera later on throughout the day to show you the results or the next phase, depending if it's done certain things. And again, I don't want to go into it now, but yeah, I go through all of that in the kind of quote unquote live kind of trading element in part two and part three, so you guys can really see how I trade the system and what the system can actually do. And then lastly, we kind of go through all the trades in terms of my win-loss ratio, some other statistics, as well as my pros and cons, and my final thoughts on this system. So that's, what we're going to go through in this four-part series. And before we begin, I just want to caveat this to say this is not how I trade. I've never used this system before, as I mentioned before, and I wouldn't advise anyone to use this kind of system. As I said, it's a high risk strategy, and we'll get into the reasons why in a second. And again, I'm testing these 10 days on a demo account, and based on the outcome, there could be an opportunity for me to put this onto a live account, and if I do, I'll document the journey as well. But as it stands at the moment, I've just done the 10 days, and as you go through the video, you'll probably understand why I traded this on demo. And again, it's just for information, entertainment purposes only, and kind of really anyone that's googling or got questions around the zone recovery system, and I kind of go into all that details. And like I said, we'll save this in part four. There is a place for this kind of system in certain areas where you might potentially want to use it. So with the caveats and everything out the way, let's get right into it. So the first question is what is the zone recovery trading system? And my kind of interpretation of it, it's more of a money management type of strategy that you can use, whereby it deploys hedging, that when the hedge is initiated, it tends to use a larger lot size to recover the loss of a losing position. And then what it will do is it will close out all the open positions when an accumulated profit has taken place. And this is known as a cycle. And this hedging can take place a number of times, and it can open a number of trades. And I'll go into that inside a second. And where this system kind of really works and works, you know, the only time where it does actually work is in a trending or a volatile market, and it doesn't need to move that much for this system to take place, depending on what settings you've got and what your kind of recovery box. And I'll go into that concept in a second, and you'll see that just now. So what we'll do is we'll go through an example of this, and hopefully it'll start to make a bit more sense. So let's just say, for argument's sake, is we opened a trade, and it doesn't matter which direction we opened it, but let's just say we opened a buy trade, for example, for 0.01 lots, and we set our take profit target at this line for 10 pips, for argument's sake. Now, there are two things that can happen. The first thing is it can either hit our take profit target, which is great, which is what we want it to do, or price can move against us. Now, traditionally, the way I trade and the way that 99% of traders trade is that we would have a stop loss in place, right? So it would hit our stop loss, and then we would go in and look for another trade set up, and then place another trade. This is where the zone recovery trading system or money management strategy comes into place. So when price goes against you by a given amount, let's just say it goes against us by 10 pips, and we had a 1-to-1 kind of situation going on over here. What it does, instead of closing out trade number one, it opens a hedge trade with a larger lot size, which in this case we'll just say it doubles at 0.02, and what it does, it creates a new take profit target to the downside. Now, so we've got two open trades. One trade that was a buy that has gone against us at 0.01 lots, and then we've now opened a sell trade for a higher lot size, so 0.02 lots, with a new take profit target. And what we've now created is what they call the recovery zone, or the recovery window, or the recovery box. So this element here has a 10-point gap between it, and what we want to do is price to break out of either one of these two sides. And again, so if we follow the logic, now there's two things that can happen here. The first thing is it can either continue to go down and hit that take profit target. And if it does hit that take profit target, it will close out trade one and trade two in a profit. And the reason why it's in a profit is because the second trade, i.e. the sell trade, was at a higher lot size, and therefore the gain it's made has offset the loss of what the buy trade has done, and therefore when you close out both trades, it will close at an overall profit. So that's one scenario what could happen. The second thing you could do, it could then start to reverse again and start going back up to the entry of the first trade. Now, if the entry of the first trade has been hit, what it does then, it then creates or opens another trade in the buy direction, so the original direction of the first trade, again at a higher lot size. And again, I've just gone with the martingale approach. I'm sure a lot of you have heard of it. It's a gambling kind of betting strategy of where every time you quote unquote lose, you kind of double your bet size. And I understand the kind of problems and challenges with the martingale strategy, but this is just for visualization purposes and an approach, so you guys can conceptualize this. And again, so in this stage is now we've now got three trades open. We've got two buy trades at 0.01 lots and 0.04 lots, and we have one sell trade at 0.02 lots. So the first trade is back at break even. The second trade is now at a loss, and the third trade is just open, so it's at its break even point. Now, again, what we're looking for, we are looking now for the market to break now to the upside to get out of this box window. So again, there's two things that can happen. It can either hit the take profit target, and if it does hit the take profit target, trade one, trade two, and trade three will all close with an accumulated profit. So therefore, we will close out the cycle in this scenario, and then we'll look again to go place that initial first trade again. Or what it could do, it could again go against us again, and therefore it could go back to where the trade 2 had opened, and then what it will do, it will then open another trade at again an increased lot size of 0.08 lots. So in this scenario at the moment, we now have trade 1 and trade 3 in a loss, trade 2 and trade 4 at break even. So, and again, this cycle again continues. So then it can either hit the take profit target, then all 4 trades will close out at a profit, or it can continue. And this is basically how the zone recovery system works. Now, if I go back to what I said earlier about this is only used in trending or volatile markets, you can see now that if price ranges in this amount and keeps opening trades, eventually you'll get a margin call because you won't have enough margin inside your account to be able to close out all these trades. So this is why we need that volatility or a trend in the market so price can break out in one direction. And if price does break out in one direction, great, it will hit the take profit target, and you'll see examples of this inside part 2 and part 3 of the 10 days of when I was trading this approach. Now you must be thinking, how on earth am I going to place all these orders, these buys, these sells, and all at the right time, and all at the right lot sizes, and all these kind of different things? So I did think that when I was going to go through this kind of journey, and I did find an EA online on the MQL5 website. It's not free. I'm not affiliated with the EA. It's an okay EA, does the job I needed to do. I did run into a bit of problems, which you'll find out in part 3, but it managed the whole trade for me. And again, I'll go through all this inside a second in terms of my trading approach. But this is how the concept works. And again, if you've got any questions, leave me a comment below. I'll do my best to answer them for you. So now we know what the zone recovery system is. What is my strategy? So my strategy is to find volatile currency pairs. Now there's 2 ways that I kind of do this. One is using my OGT ADR indicator, which again is absolutely free, link in the description. I'll put the tutorial video in the top right corner so you guys can check that one out. But effectively what it does is it measures the daily volatility of a currency pair, and what I'm looking for is I'm looking for a currency pair that is volatile, that likes to move. If it likes to move, therefore it's less likely it's going to stay in the recovery window and not open multiple trades. So that's what I'm looking for. And the second thing, which I didn't really kind of look at until day 2, day 3, was pick a pair that had high impact or medium impact news coming out for that day, because we know that when news comes out the market gets volatile. So therefore I'm trying to put this strategy in the best possible scenario I can for when the market moves. And again, we'll go through all of that in part 2 and part 3. The next thing is my trading entry. So again, because I had to place a trade every single day, what I wanted to do is I wanted to place a trade in a scenario where the ADR was really low. So if the ADR, for example, of a pair was 80 pips for the day, I didn't want to get into the trade when it's already done 70 pips of its 80 pip average. So what I decided to do is open the initial position at the start of the trading day. So that would be around 11 p.m. UK time. So you'll see that most of my trades are between 11 and half 11 in the evening for the trading day. So when Australia kind of opens their kind of market. And in terms of whether to go long or whether to go short, this was an interesting one. So I tried at the beginning to use various indicators and technical analysis, but it got to the point where, it didn't really make a difference, and I really wanted to stress test it. So all I had was, I believe it was 5 moving averages as part of kind of the Guppy moving average system, and I kind of just looked and eyeballed where the trend was, and I kind of just said, okay, I think it's going to go long, I think it's going to go short. And even one of the days, I even got my wife to just look at the chart and say, which way do you reckon this currency pair is going to go? Because at the end of the day, it's on demo, but secondly, I kind of want the system to get into trouble so I can see what kind of potential flaws that it has. And I'll let you guys watch to see whether my wife got it right or not, and whether it had to open a recovery trade. So that's that bit, and that's how I'm gonna do the kind of trade entries, or that's how it was done. And then the trade management. So the way that I've done this, so my recovery box is going to be 10 pips. So I'm going to have a take profit of 10 pips, and then if it hits that, great, and if it doesn't and price goes against me, and then after 10 pips it will initiate the kind of hedge trade. And in terms of my lot size, I've decided to go with the martingale strategy because I think it's the easiest and probably the most riskiest one to use. So therefore, I want to really put this trading system to the test. So therefore, I went with the martingale approach. And again, this is why I think this is a high risk strategy, because I would never want to put my trading account in a martingale system. So, but again, I'll talk about that inside part 4. And again, like I said, I will have a take profit target of 10 pips. And if it does open a hedge recovery trade, um, so the accumulated profit I want to get to is then reduced to 5 pips. So as long as it opens 3 trades, 4 trades, 5 trades, doesn't matter how many trades it opens, as long as I'm plus 5 pips up in my account, it will close out all the trades at at a plus 5 pip profit. And again, the EA in the settings, you can set all of this stuff and it will manage that trade on your behalf. So that is, the approach that I'm going for. And what we'll do now is we'll go straight into day 1 to 5 live trading and all the trading results. The thumbnail's on the screen, so check that video out right now, and I shall see you guys in a second.